All right, so let's start with the why of owning a home or real estate in general. Why is it that home ownership is so sought after, and what are some of the reasons that you might decide to buy? Well, for starters, it's freedom, right? I mean, you don't have to rent long before you realize that your landlord needs to approve nearly every significant change you want to make in your property that you're staying in, from painting the living room or installing a security system to even getting a pet, right? Or maybe the rising rents each time you go to renew your lease are going to make you, you're going to start wondering where your money is going. When you pull out a calculator and you start plugging in your monthly rent and you multiply it by 12 months and then the number of years you've lived there, you're going to start imagining pretty quickly that if you were paying your own mortgage on your own home, you might actually have something to show for all that money that you've spent, right? Or maybe you're just looking to put your money to work for you. Maybe you're looking for a property to live in for a couple of years and then rent out for cash flow. In the case of real estate investing in general, there are three major advantages in my opinion. The first and maybe most obvious is that real estate is a physical asset that cannot be picked up and moved, and it has a lot of potential uses. And unlike a stock traded on Wall Street, for example, you actually own a piece of real property. And even if the market depreciates, if it was purchased wisely, a good piece of real estate will typically continue to generate residual cash flow from rental income or other creative uses. Now the second, and this is a major one, is the ability to use leverage. See, in real estate, unlike the stock market or with gold, for example, you are able to go out and take out a loan to purchase a large asset. So, despite you only needing to invest a fraction of the purchase price, for example, you get to experience the benefits of owning the entire asset. Which takes us to our third advantage, which is appreciation. So, let's say, for example, that you purchased a rental property for $100,000 and you put $20,000 as a down payment and finance the remaining $80,000. Now, if the home appreciates 5% in the year, the home would be worth $105,000. But if you compare that $5,000 increase with your initial down payment, actually out of pocket, of $20,000, you really just experienced a 25% cash on cash return. Now, if you had put that same $20,000 into the stock market and had gotten a 5% return, your investment would only be worth a measly $21,000. Now, don't get me wrong, there is much more to these numbers than this. I get that. There are costs and fees associated with buying and selling, which we're going to talk a lot more about later. So this isn't to mislead you in any way, it's just to understand the concept. And I always want to be very clear here. A lot of real estate agents try selling you on buying a home, essentially suggesting that making money with appreciation is inevitable in real estate. And I, as a real estate agent and investor, will tell you that that is a false and misleading promise, okay? Now, we'll focus a lot on value buying and creating value, which helps you sort of force appreciate property values, but I just want to hammer home the point that appreciation is more often than not market timing and certainly not necessarily a guarantee of buying any old piece of real estate. And again, we will go into this more in detail in other lectures, but for now, try to look at appreciation as a very nice potential side benefit of real estate. Now, the fourth major advantage of real estate is that you can insure it against all sorts of losses. So if your investment was completely wiped out by a fire, for example, assuming you had maintained proper insurance coverage, which you're going to be required to if you finance any property, you would likely recoup the majority of your investment. And you simply cannot insure stocks or 401k investment accounts in the same way you can insure real estate. Or as an example from personal experience, on multiple occasions, we've had rental units experience extensive water damage requiring us to have the units restored and remodeled. Now, in these cases, the units were older and hadn't been updated in many years, so after the insurance companies handled the restoration process, we were actually able to rent the units for more than they previously were going for because now they were fresh and new on the inside. Now, another huge benefit of owning real estate are the tax benefits. This is huge because when you understand how much real estate and associated industries contribute to the national economy, from the obvious providing of housing, construction, to home furnishings, utilities, lending, etc., you begin to understand why the IRS lays out such incredible tax advantages and incentives for homeowners and real estate investors who purchase real estate. See, the IRS actually sort of lays out a roadmap, per se, of where they want you to put your money. See, if you follow the roadmap, you get rewarded because you're contributing to the grand plan, which helps make the economy go around. And you'll often hear people complaining about the loopholes the rich use to get essentially to steal money from everybody else. And that's just a false narrative. That's inaccurate. The real estate tax code is written to provide incentives for ordinary people like you and me to put our money into parts of the economy that benefit the local and national economy as a whole. So here are a few examples of these benefits. First, you have the interest tax deduction. Now, the guidelines on this were changed in 2018 in the overhaul, but significant benefits still apply. Now, the premise of this is that you get to write off the interest paid on your mortgage for each calendar year. This also helps offset expenses when you have higher interest rates. Now, this write-off can also benefit both primary resident homeowners and investors on rental properties. Now, another major benefit for primary residence homeowners is this doesn't apply to rental properties. It's the capital gains tax exclusion when selling. Now, this one is really one of the biggest perks for homeowners that have experienced high appreciation and are selling. Let's say a married couple purchased a property for $600,000. Then they lived in the home as their primary residence for at least 2 out of the most recent 5 years, and then they sold it for $900,000. Now, assuming they meet the basic IRS requirements, they would be exempt from paying taxes on that full $300,000 capital gains. And this actually works up from $250,000 for an individual or $500,000 for a married couple. So you can basically see how beneficial this could be. And no, you're not paying a dime on state or federal capital gains or income tax, again, if you meet those basic requirements. Now, another tax benefit of real estate that doesn't pertain to primary residences, this is only for investments, is depreciation. Now, depreciation is really what you'd call a non-operational expense, which actually reduces the taxes you have to pay on your rental income. See, just like everything else on earth, every other material, things do degrade over time, right? I mean, of course, you have to keep on top of preventative maintenance and repairs, or you can drastically, if you keep on top of preventative maintenance and repairs, and you can drastically prolong the life of real estate. And that said, the IRS has been gracious enough to acknowledge the fact that properties degrade through the years, and they've incorporated specific schedules into the tax code to account for that. And ultimately, that means that less taxes and more money in your pocket is a benefit of owning real estate when you use those. Now, there are many more benefits to real estate over other investments, and we're going to continue to cover these more in the future in future lectures. But for now, though, whatever your reason for buying real estate, there's likely a plan that makes sense for you, as you'll see coming up.